Hey, Market Chameleons. Thanks for joining us. You see me, D? I don't see me. There I am.
Yep.
Hey, everyone. Happy Monday.
Good morning, everybody. Thanks for joining us. Happy Monday.
We'll start with the disclaimer, D. What do you think?
Yep. Let's do the disclaimer. And then you said we had a couple questions in that chat. So
yeah, a lot of people asking about the Apple split.
Sure. So we'll go over that. First, let's just get the disclaimer out of the way, everyone. Keep in mind, Will and I, we're not registered investment advisors. Neither is Market Chameleon. We're not broker dealers. We're not telling you what to do. We're just sharing ideas. If you need professional help, then contact your registered investment advisor or call your broker. They should be able to help you with answer your questions. So there's the disclaimer, everyone.
Awesome job, Dima. Listen, before you get started, Dia, I will share a link to the Zoom meeting if you want to come over, because maybe you're having problems with the picture and with that. Well, and remember, give us a thumbs up, always a big deal. And if you are not subscribed to the YouTube channel, I would subscribe. Lots of benefits.
Yeah. Right, so yeah, if you subscribe to the YouTube channel, then they will give you an alert when we go live or post any kind of video guides or video tutorials, so you get notified by YouTube. So that's one of the benefits of being subscribed to the channel. One of the things you said, I know today there are some splits, big companies splitting, Apple, Tesla, and there were some questions. What were the questions, Will? How the options are impacted?
Yeah, how the options are impacted, what happens to the stock.
Right. Yeah, so before we get into the pre-market report and some of the other reports, let's just cover that really quickly. When you see a corporate action such as like a split or spin-off, the OCC, Options Clearing Corporation, that clears all the options, what they do is they'll usually issue a memo or stating how those options get adjusted. So you could go to the options clearing, it's the OCC.com, and they explain to you how those options get adjusted. And the goal of adjusting these corporate actions is that whatever happens in a corporate action, they adjust those options in proportion to what's going on. This way, there's nobody unfairly gains or loses in that corporate action. So here's the OCC, here's the memo on Apple. And if you go here, I just clicked on that memo, you'll see that what happens is they're telling you, here's the old strike, it's going to get adjusted to a new strike. So you'll probably see a symbol change in those options as well, because now they're special deliverable. So you'll see how they adjust from the old strike. Used to be 80, this one will be 20. Then the contract multiplier is 4. So you go from, let's say you had whatever it was here, where was Apple? $500.
Yeah.
Like that. All right. So the old 500 strike will be the new 125 strike. And then when you exercise prior to when it was the 500 strike, it represented 100 shares of for each contract, equal to 100 shares of stock. Now the multiplier is 4, so it'll equal to 400 shares of stock. Okay, so whenever you see splits, spin-offs, maybe even like special dividends, go to the OCC. They're going to issue a memo letting you know how they're adjusting the contracts and the new deliverables. So that's where you go to find that out, the OCC.com. Hopefully that helps everybody, because I know you said you were getting some questions in there.
That's a good place to start. That's for sure, D.
Right. If there are no other questions with that, I'm going to go then start the pre-market report.
Cool.
I wanted to cover also, we'll take a look at some upcoming earnings. We'll take a look at open interest increases from Friday's activity. We'll take a look at some ideas for credit put spreads as well in the screener. Maybe take a look at unusual option volume if we have time for all that. So if you're joining us for the first time today, this is the pre-market report. We're looking at stocks that are actively trading in the pre-market. We got the most active stocks the biggest percentage gainers over here, biggest percentage decliners. The first two I looked at, I think these are both AIT, AKCA, both of them up a lot in pre-markets, and I think those are both merger stocks or acquisition stocks. So I'm going to go skip down to the next ones. Actually, before we even do that, let's just take a look at, I'm going to filter out any higher market cap stocks moving in the pre-market, so over 50 billion. So then we're going to just see what's going on in the higher market cap stocks. Looks like I'm kind of stuck over here. So let me go back to any. So higher market cap stocks, EQNR up 2%, Intel up 1.7%, ZM up 1.3% in the pre-market. I think they're reporting today.
Yep.
AT&T. So nothing like crazy right now going on in the pre-market hours for the big cap stocks. See Apple up 0.8%, G down 1.5%, Tesla up 1%. So those two are seeing a split market up a little, SPY up 0.1% in the pre-market hours. Let's go back.
It is interesting when you see the decliners, both Walmart and what was it? Walmart and Microsoft were down today. You know, they had the run up last week into the TikTok news.
Right.
Kind of interesting, some profit taking, I guess.
Yeah. So Walmart down 1.5% in the pre-market hours. Microsoft down 1.5% in pre-market hours. That's Taiwan Semi down 1.7% in pre-market hours. But you know, we got 6 up, 6 down, so it looks like nothing crazy going on in the pre-markets from the perspective of these high cap stocks. I'm going to go back to the unfiltered report. So we looked at the first two, GMW. This is up 46% in the pre-market hours on 3.7 million shares. Let me just take a look. It has some news on it. Let's just take a look at what the stock is doing in the pre-market hours. So here it closed at $2.37. It's trading in the pre-market hours $3.42, up 44.3% from Friday's close. Here's the range in the pre-market: $2.35, $3 to $3.68 on 4 million shares trading hands in the pre-market hours. The float on that is 529 million shares. The highest VWAP bar, right, I'm seeing right now trading between $3.43 to $3.54 on 2.4 million shares. So you see here, this is in a pre-market what the chart looks like. Had like a big gap up right in the morning, sitting right around here. There is some news on here. I'm not going to get into the news. I'll let you guys, take a look at that and decide for yourself if this is justified. But let's take a look from a historical perspective what this stock GMW did historically after jumping, after having a big gap up move in the morning. What did it tend to do after the opening? So look up the gap up history. So these are looking at the last 3 years of data, and it's looking at the 12 largest gap moves to the upside. So we see here, these are the opening gap moves over here. These are the dates and any kind of notes. If the market was up big, if there was a press release associated with that move. So we see the average move, gap move to the upside was 11.3%. This doesn't include earnings because this is an earnings move. So the average move 11.3% with a high move of 28.1% over here, June 11th, 2018. So very up 44.3% right now, much higher than in this data set over here. We haven't seen it move that high. Again, there's some news on it. You guys go take a look at it, see if that move is justified. What happened? Let's just take a look at what happened to the price action after the opening during these big 12 moves. So what I see here, the average move from the opening price to the high of the day was 3.5%. Looks like 2 of those out of the 12 were that opening price was the high of the day. So 83% of the time it went higher, but you can see 17%, that was the high of the day was that opening price. Open to the low, from the open to the low, the average move was negative 5.7%. Low move on that was 17.5% over here on March 23rd. From the open to the close of the day, it looked like almost 58% of the time it drifted lower. From the open, 42% of the time it drifted higher for an average loss of negative 1.2%. So that's a really quick history of what this stock tended to do after the opening, following a large gap move to the upside. So you get a really quick view of a distribution of returns for that day. Let's jump out of this one. And because we had a little bit later start, if you don't have any questions on the pre-market, I'm going to jump to the earnings so we could get to the open interest. And
yeah, while you're on earnings, D, our buddy Mike from the YouTube chat is asking about Five Below earnings are coming up September 2nd. So if you get a chance, I know that's a retailer. It'd be interesting to see what's going on there.
So we'll take a look at. So what I'm doing is these are stocks that are expected to report earnings in the next 2 weeks. What I did was I filtered out stocks that trade at least 10,000 option contracts on average per day. And we're going to analyze these from the perspective of what is the straddle pricing, the expected magnitude of the move, and we're going to compare that to the historical actual move. So here we see Zoom, that's expecting August 31st, that's today after market close. As of Friday's close, the straddle buying a call, buying a put. So straddle in either direction is expecting a plus or minus 12.6% move. That compares to a 4-quarter average move of 8.1%. And I don't think they had quite 12 quarters, but whatever they had, 10 quarters, I forget what it is, that was 10.2%. So you could see 4.5% higher than the 4-quarter average move, 2.4% higher than this 12-quarter average. The high move on that was 18.4%. I see Macy's, that's September 2nd, expecting before the market opens. That's as of Friday's close, that straddle is pricing a 13.3% move in either direction. That's compared to a 6.4% move in the last 4 quarters and a 7.2% move on average in the last 12 quarters, with a high move of 15.9% on that one. Which one I see? Which one was it that you're asking about, Will?
It's Five Below, FIVE.
FIVE. When is that coming up?
I think it's September 2nd.
Let me see if I filter. FIVE. Okay, don't on September 2nd.
Yeah, I saw it. It was definitely there. We have
Let me see, maybe they don't trade that many.
FIVE, it looks like it's showing on the options.
Oh, right here. So FIVE, they only trade 2,000 contracts. That's why I filtered it out. Remember, I was looking for average daily option volume, 10,000 or more. So FIVE, September 2nd, after market close, that's pricing in a move of 8.6% in either direction. That compares to a 4-quarter average move of 5.7% and a 12-quarter average move of 6.5%, with a high move on that in the last 12 quarters, 21.9%. So since that one was brought up, let's just take a look at FIVE history. So I clicked on that, and here we see over here, if you guys are joining us for the first time, these bars up here, this is the expected move up or down. So that's the percentage move up or down that was expected. And then this green bar, that's the actual move to the upside. Red bar, that's the actual move to the downside if it moved down. So over here, where I'm hovering over, you could see that on June 9th, after market close, it reported earnings. The actual move was up 9.4%. The implied move by the straddle was up or down 8.4%. So that busted through that straddle by 1%. That's what this is showing over here. we see here that the straddle overestimated the move 75% of the time. The average of the implied moves was plus or minus 9.3% versus the average of the actual moves was 6.5%. Let's take a look at the implied volatility and what this tended to do. So we see on a 30-day implied volatility in FIVE that the day after earnings, the implied volatility, so we're looking at a 30-day calendar, not the near-term month. Remember, 30 trading days to go. So this is going a little bit further than near-term month. The day after earnings, the implied volatility on average decreased by 28%. So on the average 30-day implied volatility, day before earnings was 58.1. The average of the 30-day IV the day after earnings was 42.6. 5 days later, after reported earnings, the average 30-day IV was 37.5. So continued to decline further. So this is how it looks, and we're like over here. So we're like day 4 as of Friday's close, day 4 going into earnings. So that 30-day IV 53.7. As of Friday's close, we see the average 53.4. 4 days before, high of 101.9, low 42.1. So that's what the 30-day IV looks like heading into the earnings in FIVE. Again, you know, this trades 1,800 or about 2,000 contracts on average per day. I'm just going to take a look at the options chain. Sorry. And just from this perspective, I'm looking at, you know, these options. And as you could see here, they're pretty wide, right? Look at the 115 call. Where did this stop? 112.65. So here's September 4th. That covers that earnings. We could see here, here's the 12 call, 470 bid, 520 on the ask, 50 cents wide from bid to offer, right, on a $5 option. So very wide. Keep that in mind. You know, if you're doing these things, you want to keep that spread. You know, that's kind of your fee of entering and exiting. So if you're doing it, always try to negotiate somewhere in between, right? You could always use limit orders. If that was the only one on earnings,
just while you're on that options chain, a little plug for our education series we're doing on tonight's webinar. We're going to be going deeper into the options chain, talking about the theoretical value within the options chain. So I'll put that link onto YouTube Live. We have a lot of newer traders on today. It's a big audience, so I'll put that link out there, D.
Yeah. So tonight at 6 o'clock Eastern time, we're going to be, we did, I think on the options chain, we did, you know, the calls, the puts, kind of just how to read the options chain. What these numbers, questions came up. What is this theoretical value in the middle? That's what we're going to be discussing tonight on our video tutorial. So you're interested, you know, 6 p.m. Tonight we'll be doing that. If you don't have anything on earnings, Will, I'm going to go to the open interest. Okay, let's take a look at the options open interest just to see which contracts saw big gains in the open interest. So here I'm going to filter out open interest that increased by at least 1,000 contracts or more on a specific line. We're also going to, as on a relative terms, we're going to say that the open interest on that line, the increase had to be at least represent at least 20% or more of the average daily volume in that option. So basically, you know, in SPY, 1,000 open interest might not be that much, but an open interest of 20% or more on a specific line is significant enough to take a look at. Let's take a look at calls. So we're going to take a look at the calls. I'm going to look at the option price. I'm going to set it at least 25 cents or higher, and that the call price had to increase by at least 10 cents or more on the day. I'm going to take the option implied volatility and say that increased by at least 10% or more on the day. Let's take a look at, let me see how many we filtered. So there's 23 of them. Let's take a look at options that are at least at the money or out of the money. So I'm going to do from 0 to 50 delta. So this way, you know, that option had to be at least, you know, where near the spot price or out of the money, higher than the spot price. It's a call option. Let me just see what we have now. So we filtered out 15. Let's take a look at stock price and make sure, let's make the stock price above 10 bucks. All right, 12. Let's take a look what came up so far. So we see ALXN that closed at 106.99, up 0.8% on Friday. Looks like on the November 20th, 130 call. So you see that's above, out of the money, way above the strike, way above the spot price. That option closed at $2.35, up 78 cents on a day. The implied volatility was up 14.4%. The open interest increased by 1,389 contracts on this call, which represents 43.8% of the average daily volume in this option. That's on average with all, if you aggregated all the options. APPS, that looks like they came after 2 strikes on the September 18th expiration, the 25 call and the 30 call. On the 25 call, that option closed at $2.02, up $1.02. The implied volatility was up 31.3%. The open interest increased by 1,588 contracts on the day on that line, which represents 40.4% of the average daily option volume in that stock. CBRL, that was up 6.8% on Friday to $138.68. Looks like they went after the longer dated option, the Jan 15, 2021, 190 call, so way above that, the spot price. That option closed at 90 cents, up 67 cents on the day. Implied volatility was up 97.3% in that option. Open interest increased by 1,015 contracts, which represents 117% of the average daily option volume in CBRL. I'm going to take a look really quickly just at the trading activity, and let's take a look at from a notional perspective where, so ISRG, this stock, $727, up 2.5%. Looks like on the September 11th, 740 call, it traded 1,000. It traded 1,000 contracts on that line, but that was $1.3 million worth of notional value in the option on that line, September 11th. So that one had a significant open interest as well, 1,011 contracts. APPS, that was $732,000 worth of notional traded on that line. Jazz, up 2.9% on a day. And it had traded on that line 1,195 contracts, which was $511,000 worth of notional calls traded on that line. And let me just take a look in that Jazz. So that open interest increased by 1,184, representing 236.8% of the average daily volume. So really quick look at what's going on in some of these long buildups in the at the money or out of the money calls. If you don't have any questions on the open interest, I'm going to jump to really quickly the unusual option volume report, and then we'll look at some credit put spreads.
All right, perfect.
Okay, unusual option volume. This is from Friday. I'm going to take a look at. So these are the stocks that had higher than usual option volume, and let's take a look at I'm going to take a look at it from the perspective of higher market cap stocks. So these are stocks with 50 billion market cap or higher. So Workday, I see here, traded 14.2 times its average daily option volume. You see almost 112,000 contracts traded hands compared to an average daily volume of 7,860. Looks like they recently had earnings August 27th. They have some kind of event coming up September 9th. Stock price was up 12.6% on Friday. $72 million worth of calls in notional dollars traded on Friday versus 10.5 million in puts. NVIDIA, that traded 2.7 times its average daily volume with $341.3 million worth of calls trading versus 60.1 million of puts trading on Friday. The stock was up 4.1% on Friday. Let me take a look at, let's filter out. I'm going to just sort it by largest call notional. So we see here Tesla, that was 1.8 times, traded 1.8 times its average daily option volume. On the calls, $3.6 billion worth of calls trading versus 1.3 billion in puts. It was lower by 1.1% on Friday. McDonald's, 525 million, that traded 6.2 times its average daily option volume on Friday. $525 million worth of calls trading versus 3.7 million puts. That stock was up 1.3% on Friday. NVIDIA, 2.7 times average daily volume trading, $341 million worth of calls versus $60 million worth of puts trading. Walmart, also 4 times its average daily volume, $128 million worth of calls trading versus 8.6 million in the puts. So that's really quickly just from the higher cap stocks, what was going on. Let's go to, because we're running out of time, I'm going to go really quickly to the vertical spreads. So let's take a look at the bull put spreads, unless you have any questions, Will.
No, people would love to see what bull put spreads are showing up.
Okay, so I'm going to use one of our preset filters. Let's take a look at today. Let me see. Stocks in an uptrend. So we're going to take a look at what pops up with, these are stocks that are in a technical uptrend. So we're taking a look at, this is filtering us out the best put spread based on the criteria that we have already preset up here. So Apple, that closed at 492.42. Now these are all getting adjusted, so these are, remember, as of Friday's close today, after the opening, there's going to be new strikes because these are all getting adjusted, and those prices will also be adjusted as well. So as of Friday's close, it's looking at that Apple September 18th, selling the 490 put, buying the 485 put for a credit of $1.90. We think it's worth $1.03 based on historical data, which gives you a 28.1% theoretical edge because you're selling it above the FIA 190 versus 103 with a historical win rate of 80.2. So your risk on that is $3.10. In other words, if Apple is below 485 on September 18th expiration, theoretically you're buying that spread back for $5, but you sold it for $1.90, so it'll cost you $3.10, or that's your loss. If Apple stays above 490, and keep in mind, all these will adjust. I'm just doing it on a relative basis based on Friday's close. If it stays above 490, then that would be a 61.3% return on the money at risk. Microsoft is looking at the September 11th expiration, selling the 227.5 put, buying the 222.5 put for credit of $1.95. We think it's worth 76 cents. That gives you 38.9% theoretical edge with a historical win rate of 82.5%. If that stock, if Microsoft is above 227.5 on September 11th expiration, So as long as, you know, it stays right here, goes higher, or doesn't go below 227.5, that's a 63.9% return on your money at risk on September 11th expiration. Facebook closed at 293.49. We're looking at the September 11th expiration, selling the 285 put, buying the 280 put for $1.50 credit. Theoretically, we think it's worth 53 cents. That's a 27.7% theoretical edge with a historical win rate of 87.9%. If that stock stays above 285 on September 11th expiration, that's a 42.9% return on the money at risk. You have a 3.4% cushion to your break even. So if it stays here, you're going to make that, you're keeping that credit. If it goes higher, keeping that credit. If it falls, as long as it stays above 285, you keep that credit. If it falls below 285, you got an extra $1.50 you collected to your break even point. So that's 3.4%. Below that, you start losing. So Will, we only have a couple minutes. If there's any questions, I'll take them. Otherwise, you know, I'm going to let people go and trade. I know that.
Yeah, no, it's the start of the day, and I want to get my plugs in because it's so important. Remember, you know, we had actually a ton of people on the YouTube chat, and special thanks to Jake. He's probably the longest running Chameleon. He's been with us a long time, and he's great on the chat, giving people all sorts of insight from Jake, who
Thank you, Jake.
Super job, Jake. But I'm going to put out, we had questions about how you get the videos, where you go. The best thing to do, again, is subscribe. I'll put that link. And we do have a webinar series every Monday evening, 6 p.m. Eastern time. I'm going to send a link, and that's done via Zoom. But we also do that live on the YouTube stream. Again, if you subscribe to the channel, which I'll put out there at the end, do that, and you'll be alerted as well. With that, D, you have a great day, buddy, and everyone have a great trading day.
Thanks, everybody. Thanks for joining us. Have a great trading day, and hopefully we see you tomorrow or tonight at that webinar.
Awesome. Thanks, D. Have a great day, everyone. Bye.
Bye.